Hi everybody, Jeff Yastine here. By the way, make sure to subscribe to my YouTube channel. If you haven't done so already, just click that big red button in the upper right hand side of the screen there. So tomorrow is the big day, the inauguration of Joe Biden as the next president of the United States. Now, it's not only an important day for our country, as it always is every 4 years, but also an important, let's call it an inflection point for what is also an important and overlooked part of the stock market. So in this case, I'm talking about defense stocks. Now, I'm going to give you one stock in particular that I like in a moment. And it's overlooked and undervalued, two of my sort of favorite words when it comes to stocks. And I think it's set to rise at least 50% over the next 2 years. Now, 50% in this current market, that's not a rocket shot by any means. But it's not going to crash either, like so many other stocks that are highly overvalued if we see a bigger market correction at some point. And that's something important to keep in mind as our stock market melt-up continues. We enjoy those kinds of profits in trading environment, but risks also rise in that situation, knowing that there could be a correction, perhaps a big one, somewhere out there in our future. So when traders sit around and they talk about the stock market, it becomes sort of a storytelling contest. Stories often take the place of, let's say, logic and analysis. It's just human nature. It's what we do. And when it comes to defense stocks, there are three sets of stories, three narratives, if you will, that have made the rounds in the last 2 years. One story is basically, why would you buy a defense stock that has profits growing at maybe 10 or 15% a year if you're lucky, when you can buy a tech stock that's growing at least 30% a year, if not more, right? So that's one thing that has made institutions move away from defense stocks to a degree. Another one is that, let's say another blow to owning defense stocks is because many of them also sell parts and equipment to the commercial airline industry, which still has much of its fleet in mothballs because of COVID-19 with the pandemic. So that's been the case for the past year or so. Another more recent story is that this belief somehow that the Biden administration will be hostile to defense companies, and therefore defense stocks are not a good bet as the new administration comes in. And obviously I disagree with that. As a result, many defense stocks haven't really moved up at all in recent months, and this defense sector ETF here shows that underperformance. As a group, it's down about, this group of stocks is down about 18% from a year ago, compared to nice gains from both the NASDAQ and the S&P 500 indexes. Now, I think that underperformance may be about to change as the Biden administration is sworn in and basically gets to work relieving the uncertainty that has been hanging over the sector. And if there's one thing that Wall Street hates, it's uncertainty. So one stock I'm looking at now is Northrop Grumman, symbol NOC. Now, it is, of course, one of the biggest aerospace defense contractors out there. But as you can tell from the chart, the stock is down about 20% from its pre-pandemic all-time highs. And the shares have been held back by all the same concerns and worries that I spelled out a few moments ago. And this goes back to what I was saying about logic, analysis, and storytelling. But there is a compelling reason to own the stock here that most people have been missing. For one, Northrop Grumman has been slimming itself down in the last few years, selling off unwanted divisions like its information technology unit to focus on what it does best, which is, of course, aerospace and rockets. Now, among traders, these kinds of actions are called divestitures. And I think of it much like, when we go on a diet, eating only healthy food and, working out all the time. There's no guarantee on these sorts of things, but ultimately, good things usually come out of a divestiture campaign in the form of a company with better performance and an improving stock price. Sometimes it happens sooner, sometimes it happens later, but it usually does happen. In Northrop Grumman's case, it has also some powerful defense contracts lined up, which should also help to fuel its profit growth for years to come. Now, one is a scheduled upgrade of the U.S. nuclear missile fleet. Another is the design and development of a brand new long-range stealthy bomber, the B-21 bomber. Another aspect that I believe is being overlooked by investors is that the stock is at one of its best valuation levels in years. So let me explain what I mean by that. So Wall Street analysts believe the company will generate around $24 a share in profits this year for 2021. So if we divide the current stock price by that $24 a share in profits, we get a PE ratio, a multiple they call it, of 12. Now, a multiple of 12 is much too low for a company like Northrop Grumman that's going to earn more than $26 a share in 2022 and $28 a share in 2023. So as this chart shows, Northrop Grumman is traded at PE levels as high as 20 and as low as 8 over the last 10 to 15 years. And my bet is that traders will once again warm up to the stock in a much bigger way over the next 2 years as they see all these good things happen and bid the shares higher. And when they do, they will likely assign it a much higher PE ratio, i.e. a higher valuation level relative to its profits. Now, if we give it even a moderately higher PE ratio of 16 and then multiply by the analyst forecast of $28 a share in profits for 2023, 2 years from now, we get a potential stock price of $450 sometime in the next 2 years, which would be a gain of 50% over present levels. So there's the potential reward. Of course, we also have to keep in mind the risks. So perhaps the government runs into major tax and spending difficulties and begins to cut the defense budget. I don't think that's likely, but again, it's out there. Or perhaps the Biden administration and the new Congress decide to rearrange the Pentagon spending priorities, and Northrop Grumman becomes one of the losers instead of the winners, or one of the winners in that scenario. Or maybe the stock market melt-up that we're having, which is focused primarily in tech stocks, but also other aspects of the market, keeps going higher here, and for some reason defense stocks become even more out of favor with investors. I don't think that's likely, but let's look at the stock chart to give us a little bit more analysis on that side of it as far as what the chart is telling us about investors and how they think about the company. And so here is a look at Northrop Grumman stock, basically going back through over the past, not quite a year, there you go, over the past year. And this is where I say that this is the all-time high for the stock from a year ago, and as of Friday's action, the shares are down, around 20%. Let's call it 21% to be exact on that. Then, if we zoom out just a little bit more here, and I'm just going to switch to a weekly view so you can see this more clearly. So this is the part that you want to get in on a stock and stay with it. Is back here in 2010, 2011, where the stock was also at a low valuation level, similar to what it is now. And you see where the stock basically went sideways, much like it has over the past 3 years or so in our present time. Well, back here, basically for, let's say, about 5 years, the stock was high, low, moved back higher again, and then here's the breakout at this point, basically in 2012, 2013. And of course, this is what you want to, this is the whole reason why we own stocks to begin with, is this great run here for the stock from a price of 63 up to, let's say, through 2018, which was a gain of about 460%. So here we are. If I zoom in on this a little bit more over the last few years, and again, each of these bars on the chart here is 1 week's worth of price data, up and down. And so if we look at it from here, this is the bottom in 2018, and I'll point out that from October through December of 2018 was a pretty severe correction of around 20% for the entire S&P 500 and the NASDAQ as well. Then we had a big move for Northrop Grumman basically through the end of 2019, and then of course is when the pandemic basically set in, and this is again what I would call a basing pattern for the stock. And the reason I would say that is because you see where the stock formed a nice base in late 2018, and it's had plenty of opportunities since in the worst of the pandemic in February and March last year, and since then, and it's been pushed lower, and you notice it's made one low here, a new higher low here, and then it has basically tested the same price level here around 285 or so. Let's call it 287, maybe 290, going back all the way to June and July of last year. So this stock, even though it still has this sort of declining sort of wedge pattern, the thing I like about it is it's forming a bottom here, and the fact that the stock will not or cannot go past this roughly 285 resistance level, support level, let's call it, since we expect the stock to move higher. So I'm going to switch this to a daily view. There are some things to still look out for with this stock. One is it's still below its 200-day moving average. So that's something where we want to see the stock from here move up to and past this 320 level, and that may take some weeks to achieve. But then again, sometimes it's hard to tell these things. They can make up a lot of, let's call it undervaluation pretty quickly. But that's something we're going to look for. And the other thing, again, with the idea of making sure we always keep let our winners run, but also cut our losers off quickly if they start to break down. The area I would be looking for here is to make sure that the stock holds above, I'm going to call it the 285 level here. And if Northrop Grumman, if I'm wrong, basically, and Northrop Grumman shares continue to fall lower, the 285, or if you want to be a little more generous, probably 265, 270 here is another support level that goes back to the bottom of the pandemic in March. But that's where I would look to basically cut my loser off and make sure that I get out with just a small loss. And that's always one of the keys on these things, is make sure to have small losers and let your winners run, because they can run for a long period of time, just like we saw with Northrop Grumman shares in the 2012, 2013 period through roughly 2018 or so. So that's what we want to get in line for. I think that Northrop Grumman shares are bottoming here and are likely to move higher as the new Biden administration takes its place in the White House. If you like what I'm talking about, make sure to subscribe to my YouTube channel. I'm Jeff Yastine.